Tonight's speaker is Matt Caspari, and I've got the privilege of introducing Matt because I worked for him over the summer. So Matt was a former MBA student here a few years ago, graduated in 2006.
Yep.
And Matt's background is actually in biochemistry. He studied at Georgetown and worked for a few years in mergers and acquisitions and then also pharmaceutical consulting before he came here to Haas. And when he was here at Haas, he founded a company which he'll be speaking about called Aurora Biofuels with a couple of other people from Berkeley. One was an engineer and MBA student called Guido Rodelli, if I got that right. Yep.
Yeah.
And another, Bert Vick, who was a PhD in biochemistry. Yep. Okay, and I got to meet both Guido and Bert while I worked for Aurora, which is great. So Aurora Biofuels is based in Alameda, and its focus is on producing biofuels from algae, which a number of you may have heard of is one of the new innovations that's coming up, because algae has some special properties, and there's a lot of hope that algae is going to be a very efficient way of producing sustainable biofuels going forward. These three guys actually went into the business competition, the business plan competition a few years ago, and won a substantial amount of money to kickstart their firm. And for anyone who's lucky enough to visit Aurora down in Alameda will see the big check. It's still in the office there, so that was a great event. And Aurora has now grown to around 40 people or so. I was lucky enough to work there as an intern in the business developer area working for Matt. It's a very dynamic firm. It's full of technology type of people like biologists and engineers and so forth. There's a couple of business types, but it's a lot of science heads and so forth. And I guess now it's led after the founders handed over the reins to a fellow called Bob Walsh, who has a lot of experience in the oil and gas industry. He used to work for Shell. So a very dynamic firm. If any of you get the chance to work as an intern or full-time for Aurora, I would certainly recommend it. And it was good working for Matt too. It's a new experience working for an entrepreneur compared to more traditional bosses in traditional companies. So I'm sure that Matt will give you some very good insights into entrepreneurship. Encourage you to listen carefully and ask lots of hard questions, and make him squirm a bit. And I'm sure he'll do his best to answer them. So if you can all join me in welcoming Matt today, please.
Thanks, Roy. Yeah. Can you guys hear me okay? Yeah? I'll start here with the presentation. Just a quick introduction to Aurora. I think Lori's stolen a little of my thunder on the background, but I'll just go over that information that I have there. Talk about a little bit how I arrived here, my background, and what's led up to me standing in front of you today. My personal thoughts on how you start a venture-backed company, particularly more driven for MBA students, but I think it's pretty relevant for the engineers in the room. And Q&A. I think the presentation's relatively quick. Hopefully it'll give you some things to think about, and happy to spend most of the time answering questions. So as Lori mentioned, this company came out of Berkeley. Late 2005 was kind of when the idea for Aurora really started being worked on by myself in the MBA program. Guido, who Lori mentioned was a chemical engineer. He had spent 7 years prior to business school working for an engineering firm in Switzerland, and had done large-scale plants around the world, things like ammonia plants. And the third founder, Bert Vick, was a PhD biochemistry in Robert Tijan's lab. So pretty different backgrounds. We did compete in the 2006 Berkeley Business Plan competition right here. I guess that was probably the last time I was standing in front of this room. We won that, so that was a nice kickstart to the company. And as Lori mentioned, that did come with some capital to help us get off the ground. We then participated in another competition later that year, the Berkeley Intel Technology Challenge, and also won that one. So that's kind of the history with Berkeley. Since then, went on to raise $25 million in venture capital financing over 2 rounds of funding. We have 3 local venture capital firms that have backed us. The largest and most well-known is Oak Investment Partners, which is probably the largest venture fund out there. Lori mentioned 40 employees. I think we're up to about 60 now. Our headquarters is in Alameda, which is not far away. So if you're interested in visiting, shoot me an email and let me know. We do have a pilot facility that we've been running for about 2 years in Florida. So this is my one quick slide. It has a lot on it to talk about what we actually do. We're creating biofuels from algae. And the input in terms of the energy in this process is coming from the sun. We also take carbon dioxide as a major input into this, and we feed this into a shallow pond that's filled with algae. Our ponds happen to be saltwater ponds because we're not interested in utilizing fresh water, which is better used for agriculture. And we do this on marginal land. So our site in Florida is on the ocean, and we feed in seawater. We grow our algae. We harvest it. The biomass that it produces has a lot of lipid or oil inside of it. The content is actually pretty similar to a soybean. You can extract out that oil and produce a biodiesel or biofuel. And the rest of the mass that's left over can be used for animal feed. So just to give you a very high-level idea of what we're up to, here's my slide. I'm not that interested in talking about Aurora and the technology as part of this presentation. I can talk about that for days if you want. This is more about the entrepreneurial process. If you do want to talk about Aurora and the technology and you're interested in algae, send me an email and we can chat. So how I arrived here, Lori gave you a bit of my background. I did do an MBA at Haas, finished in 2006. I worked as a management consultant to large pharma and biotech companies before that. I spent a little bit of time in finance. My background undergrad was in biochemistry. I think Lori also mentioned I'm the vice president of business development at Aurora now. I was also the founding CEO up until about 9 months ago when we brought in an experienced executive who'd been at Shell for the last quarter century, running a major part of Shell Europe. So kind of what I wanted to get out of Haas when I applied, the reason why I came here, I was interested in starting a company. That was my goal. I saw this as an opportunity to evaluate ideas. It takes a lot of work and maybe a bit of luck to find an idea that's worth spending all your time and energy on. I was interested in just generally studying entrepreneurship, learning more about how this was done, coming to Silicon Valley and seeing how it was this is the place to do it. Berkeley also has a lot of smart people. Most new technology companies, you need the brilliant engineers or the smart scientists. Berkeley's a good place to come and look for that. And there's a lot of potential investors around. So I saw this as a pretty interesting way to spend 2 years looking at opportunities. I was able to achieve the goal. I obviously started the company. I'd say it wasn't easy. Spent a lot of time evaluating a lot of different opportunities. I think your first years probably see that there's a lot going on. There's a lot of distractions. There's a lot of ways to get off the path. I was in these lectures in a slightly smaller room, but sat through a lot of the life as an entrepreneur talks, and there were a lot of students in there who seemed very interested in entrepreneurship. Very few actually went and started a company. The few that did from the beginning were very serious about it, and I think they've all actually been pretty successful. So, you know, the other jobs, the internships, the skiing, all the fun thing that's out there to do, you got to kind of weigh that versus do you really want to start a company? And if you do, you really have to take it pretty seriously. General thoughts on how to start a venture-backed company coming out of school here. One, I'd say evaluate yourself. Do you really have the right mindset to do a venture-backed company? Venture-backed companies tend to be around big ideas. You need to have a vision of where you're going to go and willing to do whatever it takes to get there. That's different than most companies. Venture-backed business is pretty different than a lifestyle type of company in terms of what the expectations are, what you're shooting for, what your goals are. People are willing to take a lot of risk because they want a huge return. It's not necessarily the safest environment. And you have to understand the rules of the game that you're getting into. How's it played? What do the investors expect? What's kind of the environment that you're working in? It's fast-paced. There's a lot of quick decisions. That's great for some people. Other people like something a lot more structured and maybe slow. Are you really 100% committed to doing this? Because if you're not, I don't think you'll get it done. Other people are 100% committed, and if you're making the decision to give someone capital, you're going to do it with the group that's willing to take the risk. I graduated from Berkeley with a little bit of money from the business plan competition, but a lot of debt and no assurance that I'd raise capital. So you need to be willing to take some risk. And look at your strengths and weaknesses. I mean, how are you going to add unique value to a team? Give some real hard thought to what's unique about yourself. And I think you all have something you could offer to a team that's starting a venture-backed company, but give some real thought to your role and what position you should play. Once you evaluated yourself and determine that this is something that you're serious about, you have to find a big opportunity, and that's a hard thing to do. My suggestion, and again, these are all just my ideas on how to do this, is to find something that interests you and also has a pretty good fit with your background. You're going to have to look at a lot of ideas that are probably the wrong idea. I mean, I looked at probably dozens of ideas. I met with lots of scientists. I met with lots of PhDs. Didn't find anything my whole first year of the MBA program. Went to work during the summer for another startup. A guy who I knew who was a former VP at Genentech was doing a biotech startup, and I went there. It was 10 or 15 people. It was fun, but it wasn't what I wanted. I wanted to do something from scratch. I wanted it to be mine. And so I spent my second year not interviewing for jobs. I kept pushing and kept looking for the right ideas. I think when you find the right idea, you'll know it. And by that I mean, as you dig into most ideas, there's huge problems and the market's not big, or you'll find issues. As I dug into Aurora, the deeper I got, the more interesting it was. So I think those types of things start to play out. Some tips on finding a good place for an idea, a big opportunity. Pick a market that has good macro trends. By that I mean find something where kind of the wind's behind your sails. Energy is interesting. When we started looking at Aurora, oil was around $50 or $60 a barrel. Historically, it had always been at 20. That's a fundamental shift, and a lot of people were making the assumption it would stay high. That's a new reason to do this. Climate change, that was coming up. All these issues are obvious now. At the time, they were being debated, as to if these were significant or not. But find a good market. It will make things much easier. Find an idea that can really scale to at least $1 billion business. I mean, do you envision this thing? What would it look like? Could it be that big? You need to be convinced of that. If you're not, then potential investors won't be, and it's not worth for them investing. That's part of understanding the venture game, is that they need to go for very large companies. So if you're going to go for venture capital, you need to pitch a very big idea. This is a tough one. Figure out why you or your team, and why now? Why hasn't this been done before? If it's $1 billion opportunity, what's so special about you? Those are questions you have to answer. You can look at VC portfolio companies, and you can look on their websites, and they list all the companies they invest in to get an idea on the types of companies they invest in. You may be a little too late to the game to try and copy something that's already been funded, but at least you can get a sense for the type of ideas that are big enough to get venture capital. And timing is important. I don't know exactly how you manage that, but if you tried raising money 6 months ago, you probably wouldn't, no matter how great your idea or team. It was just a tough environment to raise capital. I think it's starting to flow again. It's probably a little more difficult than it was in the beginning of 2007 when we did this. There's a little luck to it, but be aware that the market and timing and what's going on is very important to your success and ability to raise capital. So the third thing, form the best team possible. The founding team of the company really is critical. Try and create a balanced team with complementary skill sets. I mentioned our founding team. We're all very different. We bring different things to the table. I was kind of the management consultant, business guy. Guido was in the MBA program, but he's a very strong engineer. He's managed large engineering teams. And Bert understands the biology and the science. So you don't want a team of 4 MBAs. You don't want a team of 4 engineers. Agree on the roles and responsibilities. This is important. I've mentored a few teams for business plan competitions, and after one meeting, basically killed the company because I told them someone needs to be the CEO. You got to figure out, are you all committed to this or not? You're just going to waste each other's time. So find out if you're serious. Put it in writing. Incorporate, if nothing else, to get it done. We all put a little money in. I mean, show you're serious. Find ways to make sure that your team's serious. If I'm going to start this company and go and do it, are you with me or not? You got to get commitment. In terms of forming the best team, add advisors. Ask people for help. I mean, you're at Berkeley. There's world-class professors here, And you need to be able to show people that you can build a team. It doesn't cost any money. You don't need any money in the bank account to go sign up advisors and show that you've got some people committed to you. And that's something that's pretty important. We basically created a dream list of people we wanted involved with our company, and we basically got them. It's pretty amazing. You need to go out there and network and convince people that you're serious about it and you're willing to do this, you're going to put all your effort into it, and they'll help. So just go ask for help, and you'd be surprised how many people will help you. You have to create a very simple story when you're raising capital. So you've found your big idea, you've got your interesting team. Tell me why I should invest in 10 slides. And that's kind of the heart of what you're out there doing in order to raise money. For me, kind of the key elements of a pitch is what's the problem you're solving, and it's got to be a big one, going back to $1 billion opportunity. What's your solution? And that's where the technology probably plays in if you develop some new technology. Talk about the team, talk about the amount of money you need and what you're going to achieve with it. It's pretty simple. It's actually not that complicated, but it's tough to answer these questions well and to put this together. And one kind of tip would be practice question and answer. Your pitch just gets your idea across. We spent a lot of time drilling each other between the founding team on answering questions. Answer it concise, get to the point. What is the person really asking? And by the time we got into real venture capital meetings, we'd done enough business plan competitions and practiced enough. There really wasn't a question we hadn't heard. And we had thought about the answers to these. So, it's just practice. And you've got a lot of ways to hone and improve the pitch here at Berkeley. Through the business plan competition, through the professors that are here, through the classes that are here in entrepreneurship, and from alumni. Again, people are willing to help, so ask for it and you can get the feedback. Once you've got this simple story, you got to go out there and sell it. That's what you're selling. I mean, we basically sold an idea on paper in the three of us, and we raised $5 million in our first round of funding. That's pretty unique. There's not a lot of places in the world where you can do that. You're in Silicon Valley. There's all the money you'd ever need right here. They're willing to take risk. Our investors are all entrepreneurs who started companies at a very early age and were very successful. It can be done by guys like you. You need to network. It's very easy to get a venture capital meeting. If you're coming out of Berkeley and you've found the big opportunities and you've got a good story and you've got some good advisors and you've got a good team, you'll get as many meetings as you want. It's not that difficult. But expect it to take some time. Unless you've got something amazingly unique, people are jumping all over you, which is unlikely. It's going to take time. You need to go talk to dozens of venture capital firms. We were up and down Sand Hill Road. People want to do due diligence on you. They want to ask questions. They want you to prepare material for them. It's a lot of work. It's long hours. You don't know if a deal is going to come together or not. And you usually need to form a syndicate, meaning that not one venture capital fund is going to say, great, I like you, I'm in, the deal's done. You probably need to convince 2 or 3. We had 3. So you got to spend enough time going out there to get people interested. And there's a lot of external reasons why people will say no to you. So getting past those reasons and getting them convinced that you should be there, 1 or 2 investments they're going to be doing this year, that you're one of them, takes a lot of work, but you just got to go out there and talk to people. And lawyers get involved at the end. So this whole process takes 6 months, could take a year. And that's the question, are you committed enough to an idea to go spend the time and the effort to go do it? I think it's well worth it. I actually think the risk is actually pretty low. Most of you guys probably won't have a hard time going and getting a job if you try doing something entrepreneurial and it failed. That was kind of my mentality, and I knew I wanted to do it and try it. So if you're sitting here and you came to Berkeley to try and do something entrepreneurial, just go do it. It's really not that big of a risk to give it a try. So just some other random final thoughts, kind of last slide. Raise more money than you think you need. Things cost more and take longer. Money can solve problems. You're in a better negotiating position for your next round. We've got some great entrepreneurs involved in our company, and the ones that have been successful multiple times, every time, tend to follow this and raise as much cash as they can. You need to manage your investors. I like to over-deliver. There's a lot of entrepreneurs that oversell and then get themselves in trouble when they don't deliver to their investors. You don't want to have surprises at your board meetings. You want to inform your investors, keep them up to date on what's going on, good and bad. And I've been very surprised how understanding people are. They expect you to hit problems. They expect you to hit hurdles. The question is, do you have the team to get by those hurdles and over them? And do you create value in doing that? And if you do, it's fine if there's a problem. Actually, I look at problems as usually good things. And you have to make decisions that result in the biggest pie. And that's part of understanding the game that you're in, is you're trying to make the stock as valuable as possible. For us, it was hiring in a new CEO. So hiring in my boss. At the right time, after I'd raised 25 million, and we had a solid team, and we had a lot of validation, we said, we're gonna need to go raise a lot more. We're gonna need to do a large infrastructure project builds out. I don't know anything about this. So at the right time, you need to be willing to do those types of things. And kind of the way I look at it is our product in the short term, what we're selling is stock. Longer term, we'll have another product. So figure out what people value. If people value an experienced CEO at the head of the company, then recognize that. So that's just one example. But regularly we make decisions based on, does this increase the value, or what increased the value the most? So that's my quick presentation, and open it up for questions.
So we have a mic up front. Feel free to raise your hand and I'll take the mic to you and we'll get started.
So how did your background in management consulting help you as an entrepreneur?
I think it's actually pretty relevant. There's a lot of information out there that you have to gather and synthesize. In our project, there's 20 different ways you could go about creating biofuels from algae. There's all different systems you can grow algae in. There's all different types of organisms you can grow. There's many different ways to go about it. So I think taking in all this information that's out there, synthesizing it quickly, and then making a decision as to which path makes the most sense, and then being able to communicate that to people is a skill that you learn as a consultant. When we go out and pitch investors, all I did for 3 years was make PowerPoint presentations. I made this in 15 minutes this afternoon. So you get that skill of being able to put it together quickly and go pitch it. I think that's pretty important. Yeah.
I'm just curious as to what things do you think about when you're trying to form your founding team? Were there some, what are the considerations that you thought about when you picked a team member, and what were some hurdles you guys came across and how you accomplished them?
Yeah, that's a good question. I wanted really smart people. I wanted the smartest people I could find, and I wanted people that I felt I could work with for a long period of time. Those were, to me, the most important attributes. And I wanted people that had different skill sets than me. So Bert and Guido are both brilliant. They're some of the smartest people I ever met. And I had worked with Bert on a project in an opportunity recognition class. It had nothing to do with what led to Aurora, but I respected him, thought he kind of got it. He understood the business issues more than most of the PhDs I had met. Was a very smart guy. And Guido the same way. So I think you need to have the right fit and see that you could really work with people and respect them. And most of the successful companies I've come across, it's all about hiring the best people you can at any point in time. And for me, starting Aurora, the best people I could find at that point in time was people around me at Berkeley who had good backgrounds who I could work with. And Bert, although he has a PhD in biochemistry, had never done anything in algae specifically. So it wasn't like we developed Bert's technology. And it worked out fine. And actually investors, some of them at least, are totally fine with that approach. They want to make sure you have the right team to solve the problems you're going to come up against. And I think smart people are more likely to solve hard problems.
Do you find that there's a certain personality type that maybe
Yeah, I haven't given it a ton of thought. I'm sure some people have and have looked into it and studied it. You need to be pretty optimistic. It's a bumpy road. I always look at the longer term path. I mean, on any one day, especially early on, when you're not sure if you're going to have money, you don't know what's going to happen, you really do need to say, well, look where we came from and look where we can go. And I've always kind of had that view that we've created a lot of value, we're creating value, we're having a crappy day today, but you can get over it. And I think as you go, you realize that you can pretty much get over anything. I mean, you can lose a key member of your team and get over it. You can have a problem with I don't know what. There's usually ways to solve most of these problems, and I think the good entrepreneurs realize that. I don't know if it's just because they're optimistic or through experience, but that's something I've seen.
So biofuels have been around for quite some time. What exactly was unique about your product and idea that kind of won the investment?
Yeah, so when we started the company, a lot of money was going into traditional first-generation biofuels, so taking corn and refining it to ethanol, and smart VCs were funding ethanol plants, and they were doing the same thing with biodiesel. You take soy oil, you stick it through a conventional plant, and out comes biodiesel. These plants, this technology has been around forever. There's nothing new, really, or innovative about it. And we were actually pretty surprised that venture capital was going into those kind of plants, because again, you need huge returns from venture capital. And it didn't really make sense to us that these smart investors were putting their money into these plants. We actually kind of thought it was crazy. We looked at it and said, well, the problem in biofuels is the feedstock. What are you going to create the biofuel from? You need some starting point, and corn and soy is not a very logical starting point for a bunch of reasons. One, it just doesn't scale. Two is it's a food crop, and we use it for other purposes. So those things didn't make a lot of sense, and we came across algae, and it wasn't a new idea. It's actually an idea that's been around for decades. It's been studied by the US government, but there had been some major shifts, and the big driver for all of this is the price of oil. There had been a lot of work that had gone on the biotechnology side of algae that we thought was interesting and unique and could be applied to algae in ways that hadn't ever been applied before. And those kind of factors were coming together that made this the right time to do this. And it also helped that algae had been this obscure field that not a lot of effort had gone into. There's not a lot of algae specialists out there in the world. So it was ripe for innovation. It was ripe for entrepreneurs to come in and spend a lot of money and put a lot of smart people on the problem. So that's a little bit about why.
Just sort of feeding off your previous response that you said, your background in consulting wasn't necessarily as useful as you would like to be becoming an entrepreneur. When you look at the fact that your other two partners, one was an engineer and one was a PhD student, and there are many of us here who don't necessarily have a background in engineering either. How do you feel, what kind of value do you feel that you brought to the table in your team, and how does that translate to what we want to do when we're looking to start an engineering company, not in engineering?
I think the consulting experience was relevant and useful for the startup. I mean, I guess, what's your background?
Investment banking.
So I think it's putting together the story and being able to go out and tell it. And most engineers aren't very good at that, no offense. They want to get into the detail. And I've seen a lot of pitches at business plan competitions where they talk all about the technology. Well, your typical investor doesn't care. That's the second or third meeting. After you got them hooked, then you bring in the engineering team and you sit down with the technical people and you run into the details. So I think for you as a banker, it's identifying a good idea. Show investors that you went through the process that I went through, that you looked at all these ideas on Berkeley's campus and you found the best one. And you found the best guys to work with on that idea. And then go tell it and pitch it. I mean, someone has to drive the company forward. There needs to be an entrepreneur who's going to grab the two other guys and say, we're going to go do this. And are you in or not? And that's what I was doing because I wanted to go start a company. So that's what you offer. That's what you bring. Beyond that, do you create value through business development or whatever else? Can you raise the money? I mean, that's what the CEO's job is in the short term. Go raise the money. So you're a banker. You know people with money. So that's what you should do.
How hard would it for you to get, for your company to get VC funding? I mean,
And looking back on it now, it doesn't seem like it was so hard, but at the time, parts of it, were pretty tough. So I may have this a little off, but we won the first business plan competition, I think it was April of 2006. We won the second one probably September, October, and I graduated in May. So it was kind of, during that period, we first started meeting with some venture funds. Kind of informally, we're still doing some work and still kind of finalizing our pitch. And we closed the round in January of 2007. So it's actually pretty quick time frame to put it together. Again, the market was pretty hot. We had some buzz because we had won a couple of these competitions, so we were in a decent spot. But it was a lot of work to get it done. It was hectic. It was crazy. It was busy. You never know if it's done until the money's in your account. Lawyers find some problem at the last minute on who knows what. So it's stressful, but looking back on it, it wasn't that difficult.
I wanted to ask you how you knew. That you had the right idea, and you were talking about evaluating a number of opportunities and rejecting a lot before you found the right one.
Mm-hmm.
So, I guess how far down the path did you go with this idea? Was there a certain milestone, like we won the business plan competition, or we raised our first round of financing, or is it just that this idea never hit a dead end, and so that's what made it the right idea?
Yeah, on this idea, I very clearly remember that when we were participating in the competition, which goes on for a while through the different rounds, I knew that there was enough there to go do a real company and go and try and raise money. And win or lose, I didn't really care in terms of whether I was going to do the company. I wanted to win as a marketing event for the company. But if we would have lost, we still would have gone forward with Aurora. How did I know that? I don't know. I guess it just came from looking at a lot of ideas. I mean, many ideas are too small. Many potential teammates you don't really want to work with. So there's a lot of reasons that kill ideas. It's tough to find the right one, but if you go through that process and talk to people. I mean, I was meeting with venture capitalists, I was talking with people, I was taking all the entrepreneurship classes here, I was looking at a lot of opportunities, I was talking to the licensing office about what technologies are out there, and you start to kind of get a feel for what looks interesting and what doesn't. And I guess as we started to work on Aurora and put our ideas down on paper, which we needed to do for the business plan competition, that it was gelling enough and felt good enough to go try it. I didn't know if I'd be able to raise money or not, but I knew it was good enough to go try.
What's in store for Aurora Biofuels in the immediate future?
It's kind of not the topic of this course, but we're building out a larger demonstration, show the technology at a larger scale. So that's in the immediate future. We can talk later if you want.
How do you seek out engineers and scientists with
It was pretty hard when I was here. I think it's much better now. I mean, I see a lot of conferences and things like that being put on by collaborative groups. I mean, look at the room here. It's half engineers, half MBAs. So I think there's actually been a lot of work that's gone into this at Berkeley, which is great. I think it's awesome. I mean, I met Bert in this opportunity recognition class, and that was just luck. He, as far as I know at that time, was the only kind of PhD in hard science that was taking that class. You just got to go out there and talk to people. There were some PhDs that had some technologies, and I talked to some professors at the Lester Center or other places about, hey, I'm interested in having an MBA help me out. In my experience, those tend not to be big ideas. They tend to be some technology that someone developed, and now they're trying to find a big idea for that technology, which is usually tough. I'd rather go about it from the market side, which, going back to why consulting may be useful, from the market side, figuring out what's interesting segments in a market, and then are there new technologies that can be applied there? And can you find something in Berkeley that's relevant? I mean, there's a lot of, for example, energy-related research going on at Berkeley. Find a segment that makes sense. Go and get to know the professor. I mean, that's what I'd say. Find the top guy in the field if you can, and somehow convince him to work with you. Tell him you're doing a business plan competition, and you're looking to maybe, utilize some of his technology. Some people will be very receptive, some won't. You may be surprised. Maybe he has a postdoc who wants to actually be part of the team. So that's, you just got to go dig around.
In your entire journey from where you started till date, have you ever faced a conflict between driving the valuations and fulfilling short-term revenue needs of the company? And what advice would you give to entrepreneurs who tend to get tempted in driving the short-term revenue at the cost of long-term valuations?
So kind of the trade-off between short-term revenue and long-term value, that's the question. I'm interested in long-term value. Again, what game are you in? I've got the largest venture fund in the world as my backer. They could care less about a little short-term revenue. Am I going to create a multi-billion-dollar company at the end of the day? So it's pretty easy once you've got the investors in the company and you know what the game is, and the game is making the stock valuable. Now, if the market valued short-term revenue for whatever reason, that to show you could get a customer, then I'd try very hard to get it. For us, it's not that important. It's all about what price can we produce our product. It's a commodity product. Everyone knows we can sell as much of it as we want if we can do it at the right price. So I'd much prefer to spend my money on scientists and engineers and make sure I have the right solution that's the lowest cost solution that works, and spend a lot of money along the way to get there. Because at the end, I know the market values what I created. So it's, yeah, please.
I understand that is the most logical and the financially rewarding way to go, but generally that doesn't happen because of the constraints. So have you encountered such constraints where you have to actually make choices? And so what was your experience?
What constraints? There's no constraints. If you have the right venture capital backers, there's no constraint. If you're doing more of a lifestyle business where you need to self-fund the company, or it's your money and your pockets only go so deep, then yeah, you're driven to get short-term revenue to stay alive, and you don't really have a choice. If you have the right type of venture capital backers, the money's almost endless. As long as you're creating value and you can continue to sell more stock and people are interested in what you're doing, you can raise more money. We've raised 25, but we can go raise more if we wanted to tomorrow. So there's no pressure on me to get short-term revenue.
Have you ever found it's necessary to protect your vision from the VCs that have invested to protect? And also, how do you manage that relationship so it continues to be your company and what you want, especially after giving away ownership?
Yeah, that's a good question. I think we've been lucky in that kind of the vision and strategy that we set out at the beginning is amazingly similar to where we are now. And kind of the experienced VCs we have are very surprised because things usually change a lot in startups, dramatically. You may be in a totally different business than you thought. So there hasn't been really a need to change what we wanted to do. It's actually exactly what we wanted. If it wasn't, yeah, I think that'd be probably pretty frustrating, unless I agreed that there needed to be a switch. The individual VCs who are going to be on your board is a big decision. So if you get there and you have some choices and you really are going to raise funding, it's tempting to just take a check when the check's there, especially after you spent months or a year fighting to get that offer. But be very careful about who you take a check from, because that person is going to be on your board. You basically give up control of your company if you raise venture capital. If they want you out or they disagree with what you're doing or want to change the whole strategy, they're going to find a way to do it. So that's, again, understanding the game that you're getting into. It can go very, very well if it goes well, and it can go horribly bad, especially if you're a founder who's very attached to the technology or the idea. So we've been fortunate, but I'm very aware of what could have happened or what could happen going forward, and that's just the way it is.
Did you face any intellectual property considerations while developing your idea? And how important do you think pursuing a patent on a technology is relative to, let's say, writing a business plan and talking to people about it?
We did have IP issues. We licensed some technology from UC Berkeley, so went down that path, which is its own whole conversation, but it can be done. We did it. We also wanted to develop anything new outside of Berkeley for IP reasons. So, I mentioned we raised $5 million very early on in the company's life. We need to go open up a lab. We needed a biotech lab with scientists. You're not going to hire scientists, from Stanford and Berkeley if you only have 6 months of cash in the bank. You're not going to open up a lab with a little bit of money, a few $100,000. So we needed a decent amount of money to get this thing even going, and mostly driven by IP. And the story was, we will take care of money and we will create this IP. And that's what we had to go out and do. So I think IP is a very important piece of the pitch. So you've got your problem, and then you've got your solution. Hopefully there's some IP as part of that solution, or if not, a plan to generate IP with their money. Because the vast majority of VCs place a lot of value on intellectual property. It also goes back to the question of kind of why us and why now. It's maybe there's some new technology that you're going to apply to some area and it hasn't been done yet, so you want to move quickly to lock up that IP. It gives a long-term competitive advantage, so I do think it's pretty important. That all being said, as your company grows, the original IP may have nothing to do with the end idea. You might develop a lot along the way, and that often happens, but you need something to pitch.
We have time for about one more question.
Yeah. And VC valuation is actually kind of strange. They usually want a certain % ownership at the end of the round, and it has a lot to do about actually how much money are you going to raise. So it gets complicated, but the simple story is you're probably giving up 40 to 60% of your company, regardless if you raise 1 million or 10. Which is strange to a lot of people, but it has to do with their expected value at the end and what they've seen before. So if you raise $5 million, you could be looking at something like a $5 million valuation in that range, if that makes sense. And over time, the later rounds, you're usually giving up less of the company. Maybe you're giving up 30% in your second round. And again, it depends on how much you want to raise is related to the valuation. So it's not so much of, I think my company is worth $1 million, and they say, no, it's worth 500, and that's kind of understanding the VC game and how they think. It's a little weird. People don't tend to understand it.
Okay. I'd like to thank Matt for coming, and see everybody next week.